What's up, guys? Welcome to another episode of Rawstocks. I'm Rustic, and today we're going to be looking at Tesla's chart. We're going to look at where price came from, where price is today, and where price is likely to head tomorrow. Just a reminder that you can find me during market hours hanging out in Traders Helping Traders Discord. The link is in the description below. I'm in the Tesla chat and I have my own sub. I post a lot of live market analysis with charts, entry points, exit points for Tesla options, as well as a lot of other content. So if you're not already a Traders Helping Traders member, join the Discord with the link in the description below. Also, a reminder that we just released some new merchandise. It's on my Etsy shop, Rawstocks. You can find the OG hoodie, you can find the Greedy Piggy t-shirt, and you can find the Money Printer t-shirt that's part of the new Money Printer line. We will have new merch dropping soon. Also, I'm launching some one-on-one mentorship programs. So if you're interested in getting one-on-one teaching and training on how to read market price and structure, go ahead and find me in my socials. The links are in the description, so you can get in contact with me. We can talk about what one-on-one mentorship would look like. So let's just go ahead and jump into the chart. We had a lot of nice price action today. We had moves in the downward direction. We had moves in the upward direction. A lot of money being made. A lot of traders taking wins. So congratulations if you caught that early entry. We called it out in the Discord. A lot of people took it. A lot of people made a lot of money. We also had some other people call out the reversal, which also ended up paying out nicely if you took that trade as well. So we did talk about the likelihood of this happening yesterday, right? So what did we talk about? We talked about the liquidity that's held in this wick, right? This wick came down, it touched a level. The level is anchored to these candle bodies, right? Candle body here, wick here, candle body here, candle body here, candle body here, candle body here, right? All in the general vicinity, give or take a couple cents, right? So 2 days ago we had a candle trade down. We hit that level, we bounced back, okay? Left liquidity in that wick. We talked about what that would look like if we were to be drawing on liquidity, right? So we did talk about a couple weeks ago, back here, we had this large wick, drew on liquidity, right? Ultimately, price wanted to head down. We talked about the potential that smart money was reversing here. This was options expiration week, okay? Took us all the way into Friday where that week expired. New contracts, right? Thought smart money went short. Look, smart money did go short, right? They repositioned. Okay, now we have another large wick from here, and we talked about drawing on that liquidity. Well, we also left a giant wick here, right? So we have been drawing on the liquidity that's in here. Okay, and do we want to continue to draw on the liquidity that is now built up in this wick here? Right? The fact that we came so far down into this wick, okay, we did rebound, but we came into it and then we left another long wick. That can be a really nice sign. If you look back here, right, we have a long wick. We traded into the wick. We ended up and then we sold off. We left another long wick, more liquidity. We took it with this candle, right? So different points where these long wicks trade back into. Another long wick here, we traded back into it, okay? And then ultimately we get down to the bottom and we leave a little doji that has a little wick, right? And then price rocketed from there, but that was a very clear indicator that it was a reversal candle. You know, it's a spinning top doji at the bottom of a trend, okay? And this is definitely a candle that you look for in a reversal pattern. And so we took off. We didn't come back for that liquidity. It's a little wick. We didn't need that liquidity. A lot of the orders that needed to be filled got filled, and we ripped off from there, okay? But the point of what I'm saying is that wicks hold liquidity for orders that either want to be filled or haven't been filled yet. And so we're looking at those as important areas. So I'm going to go ahead and mark that off for you guys. I like to do my liquidity when I'm looking at wicks with blue rectangles. Okay, so we're going to mark that off and we're just going to extend it out and we're going to say liquidity sits here. Okay, I'm going to delete these. Actually, I'm going to leave these on. These are SSL stands for sell side liquidity. And the reason I'm going to leave them on, even though they're sitting in this wick, is to show you guys when we drop down to the 1 minute chart where these sell side liquidities sit. Okay. But also want to just notice that here is our blue liquidity pool. So mark it off on your chart if you don't have it. If you're following along and you're charting like I do, and I know a lot of you are trying to learn these smart money concepts right now, we're going to mark this liquidity wick in blue. Okay, you can label it. I've showed you guys how before. You can double click it, right? You can type liquidity pool, or you can label it however you want to make sure that you understand what it means, right? I do it in blue, so I already know what it means. My yellow is my order blocks, my red, my green, they're fair value gaps. They're left by the indicator that I use, which is the Smart Money Indicator by Algo. Okay, but the Algo indicator does not leave liquidity targets like that. So I put it in there. This order block here, I manually entered. H4 means 4 hour. Plus means a bullish order block, okay? And I manually entered this one because 4-hour order blocks are on a high frequency time frame, and those are areas of importance. We didn't get down into this order block. That's something that I want to make sure we highlight. Okay, we did not come back into this order block, and when we drop into the 4-hour time frame, so I can show you where that came from, okay, we're going to see that we haven't even got down to here. We know orders sit inside of order blocks. So the fact that we missed it by just a little bit is definitely suspicious. Okay, and so you may ask, well, what does that mean? What does that look like? What's the importance of not hitting it? And I'm going to show you as we look further into the chart. Okay, but what I want you to notice just out of the gate right here is that if we connect these wicks, right, and we connect these wicks, we have a falling wedge. Okay. And falling wedges, what we can expect or what we can anticipate, we don't know that this is going to happen, but it would certainly meet what I suspect is going on, is that we start to trade down into this falling wedge one day, right? Could we hit it tomorrow into the order block and reverse, right? Because something I was talking about on Monday and I talked about yesterday was that we saw accumulation in this candle, and I showed you on the lower time frames yesterday how we had a chop. Even though it doesn't look like it, it left a long wick, right? Because we had this kind of like early open sell down, and then we kind of chopped, and we did have price run up near the end. Then we came back down, giant wick, manipulation, okay? Accumulation, manipulation, right? The distribution already started yesterday. We got the manipulation, distribution, okay? We opened up. We ran a little bit higher, okay, and then we dumped down, all the way down, okay, distribution. Now we've started to see already reaccumulation. Now, are we looking for this to be a reversal? And I'll show you exactly how all this looks when we drop down into the lower chart, as you can start to read how structure is developed in red on a lower time frame, right? But even on the daily chart, some of these things can be indicators. Okay, so we saw distribution. We've already started to see reaccumulation. On Thursdays, typically, doesn't always hold true, but we either see redistribution or continuation, and that would look like a move to the downside. Could it hit into the order block? Certainly could. Could it trade down to this falling wedge trend line? Certainly could. Could it not? Could it just get down into this liquidity pool? Right? We don't know yet. Does smart money want to rip it back up towards these upside targets? Potentially, right? Maybe they changed their position here and went bearish, right? And then maybe down here they want to run it back up and go bullish. So certainly a possibility, right? So something we're looking for. Or the other option on Thursdays, if it is following a standard PO3 model, is that reversals can happen on a Thursday, right? So what does that look like? Do we trade down a little bit and then rip it back up and we catch a reversal, right? And a reversal would look like trading back into this candle, potentially above this candle body low, okay, 244, maybe higher, you know? So do we catch a reversal and, or even just a straight gap up, you know, because we got the early sign of a reversal here, but I'm not sure that it's done yet. We could get the redistribution, but do we catch a gap up and just go? Something like this. This does not look like a bottoming candle. Nothing about it screams that we are in a straight reversal, but it's entirely possible. Okay, we could just start heading higher, and we saw the reversal here. So let's go ahead and drop down to the 4-hour chart because I want to show you where that order block came from. Okay, so as we drop down to the 4-hour chart, we see this last down close candle before an uptrend. That's where order blocks are. Same thing on the upside. Okay, right here, last up close candle before a downtrend starts. This is an order block. This would be considered a bearish order block because it's before the downtrend. Okay, and this would be considered a bullish order block because it is the last down close candle before an uptrend. Same thing that applies on every swing, right? Every block is an order block, but there's only certain order blocks that are really of interest, and that is at the top of swing highs and swing lows, and then internal structures, right, of swing highs and swing lows. So you can find different order blocks different places. For me, I'm looking at the 4-hour order block down here as an area of interest because that's where we're heading down to, right? So you can also start to see back on Monday, you can see a little bit of sign of that chop, manipulation, distribution, right? Reaccumulation. Are we going to get further distribution and continuation to the downside, or was this the first sign of a reversal candle and then we're heading back higher? So we'll have to see as price develops tomorrow which scenario is playing out. But again, we have our daily liquidity pool. We're still in that. It's accumulating liquidity there. It was kind of a draw on liquidity here. So just another time frame. We're going to continue to look. I don't see anything of additional importance. We still have all of the price ranges we talked about in the previous video. If you haven't watched it, go ahead and watch it. We talk about it in depth over the last number of days since these were hitting these different areas of control. We got a point of control on a volume. We got a bunch of 1 hour, 1 minute unbalanced price ranges, which we know eventually those will trade into, right? All the way up to here where we have another unbalanced price range and we have another order block, right? So this is a bearish order block, last up close candle before a downtrend, right? We've had a significant sell-off. Have a wave 1, 2, 3. Are we going to catch 4, 5? We don't know. Was this here a 4, a 5, and this is finishing off, potentially down in this order block, potentially even all the way down to the trend line, and another price point we have at 223.59. We could see that. This falling wedge could just kind of like trickle down, hit that, then find our reversal, right? So we're just going to continue to watch seasonality. September is often bearish. We're running into the end of the month here. October isn't traditionally a great month either, so we're going to be watching those things from a seasonality perspective. Let's go ahead and drop down into the 1 hour time frame. You can also see here we got the 4 hour fair value gap as well. So if we were to take out this order block, we got a 4 hour fair value gap. We also have some above 4 hour bearish fair value gaps that if we were to get trading into. We have this little one here, see if price respects it tomorrow, and then see if it wants to target these if we head to the upside. Okay, we got the 1 hour time frame. Again, looking back to Monday, chop, manipulation, distribution, right? Manipulation, distribution, reaccumulation, distribution, reaccumulation, continuation, distribution. You be the judge. We did get a 1 hour fair value gap. See if price respects that going into tomorrow. If it takes out this fair value gap, bam, bearish, boom, all the way down into the order block, all the way down to the trend line, right? So let's actually adjust this wedge just a little bit because we can see here on the 1 hour chart, we get a little bit better perspective of what that wedge looks like. And we can actually extend that trend line all the way up here. So we can see this wedge has been happening, right? We got one touch, right? 1, 2, 3. On the third touch, potentially 1, 2, up, third touch. Look for it to rip in the other direction. That would put us in the order block. So that's kind of the way that wedges often play out. But we certainly could see come back down here, test this, and just tear through it as the falling wedge, right? And if it breaks down, it doesn't play out, we could see it fall down further. So watching that wedge, that's going to be important. Patterns are sometimes important. They don't always play out, but they do give indicators that if a trend breaks, that we're going to potentially head in one way or another. And because we have 3 points of contact here, if this starts breaking above this trend line, I'd be looking for a back test potentially to this fair value gap and then running, right? So things we're watching, watch that wedge, mark it off if you don't have it. It's going to be very important as we watch where price goes over the next day or two. Drop down into the 15-minute chart, got a better, clear indication of what's been going on, right? Monday, again, this range, chop, manipulation. We got the distribution, reaccumulation in a small way, distribution in a large way. We called this shot, right? We called it. We were running puts, 230 puts. We got 215 put lottos, right? We've been running puts. We've known that smart money's been going short. We've been running this whole thing down on the challenge, the 1K to 75K challenge. We're just doing awesome on it. And I'm in the Discord and I'm teaching it. I'm showing you guys how to manage risk. I'm showing you how to run a small portfolio into a large portfolio. So let's adjust these a little bit better as we again have a more clear perspective of what that wedge is looking like on a smaller time frame. Right? Again, 1 point, 2 points, 3 points. Do we come down, test a third point, run higher? We got some more smaller time frame fair value gaps, but we also have this 15-minute bearish fair value gap. Are we looking? And right now we're respecting it, okay, because it was late in the final 45 minutes. Are we going to respect it? After hours tradings does not count when we're looking at fair value gaps or any of these things, order blocks. We're not counting those. It's not during market hours. Things get, running in a direction sometimes with aftermarket trading because of low volume. So we're not counting that. We're only looking at market hours, which also provide your gap levels as far as like daily gaps go. So are we going to respect this bearish fair value gap? Come take out these bullish ones, head down, touch the trend line one more time before we rip it up, find ourselves in this order block from the 4-hour, head higher, right? So nothing else as far as indication goes of unbalanced price ranges on the 15-minute chart. Let's drop down to 5 and see if there was any other clues that we got. Okay, again, heading all the way back to Monday. Okay, we got that gap down. We started down here, right? Chop, 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 manipulation, distribution, okay? Reaccumulation, distribution, reaccumulation, continuation, distribution. We'll see, okay? But that's what we're looking for. There's that wedge again on a smaller time frame chart. Looks great on the 5-minute chart, touching, 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 right? Very respectful of this trend line. We have no bearish fair value gaps at this point. We have only bullish fair value gaps on this move up, okay? We came back down, we took liquidity. We created another little fair value gap in the 5-minute chart. Highly doubt that one will be respected. I would wager to say that we will come back down at some point early tomorrow and test these fair value gaps, see if they want to hold, right, before potentially making a move in the other direction. The fact that we got this wedge going would tell me that if we start heading down here, we're likely to take liquidity and touch this trend line one more time, put ourselves in this order block. This is why I'm still swinging the 230 puts. Reminder that this is not financial advice. My live trades, my call outs are for educational purposes only. Please trade at your own risk. And but again, we got these fair value gaps here, and we have an above one, a bearish one that was respected. But I bet if we get going higher, because we already tested it here, I would doubt that it would hold a second time. We could see ourselves in this order block potentially before we drop down, rally higher, right? So let's just look at using the path tool, what a couple of those scenarios would look like. Okay, so say we open flat or flattish, right, and we come down and we do one of these guys. Okay, that could be a likely scenario, just to back test this trend line one more time, see if it offers support, dump it down, steal liquidity down here, and then rip it in the other direction. Okay, totally a possibility. Right, the bears are only looking for this order block. I do believe there are a lot of long orders here or closing out short orders inside this order block, and so that's why I did not close my puts, and I took an additional position after I'd already rode this down. I took another one around here. Okay, I didn't take the exit. I was looking for the order block, ripped it in the other direction. But do I think we come back down here? Highly probable. I'm looking for this order block because there's orders here that either want to close shorts or enter longs. Okay, so it's going to be magnetic. It's going to want to draw price in. We got the wedge. Okay, it could take us a little longer to get there. Do we hit 230? I'm looking for an exit strategy for myself in case we don't. Okay. We have 2 days left on weekly contracts, so there's still a little bit of time in our favor. What would that look like if that scenario didn't play out and we just headed higher? Okay, say we again open flat. Could we come back down here, test the fair value gap, leave it open, see something like an optimal trade entry, on our fib retracement tool? Okay, hit that fib and run up into previous day high, order block, right? And then come back down, head higher, or even just come back down into next week. Also a possibility. Okay, so we're really looking for price to open, move in a direction, see where it wants to go, and then make a decision on where we think price is going from there. Go ahead and exit those. I don't see, again, because of the chop, the drop, we balance this price range right here. So what I teach is these breaks of structures and change of characters, which you can see some of these where they're anchored, right, to a change of character, a volume imbalance there. We got a 1 minute break of structure here. You can see also a 5 minute break of structure. Okay, so I teach that these break of structures, when price gets rapidly moving in one direction like this, I didn't expect it today, but we came back up and balanced that price range. Okay, our other unbalanced price ranges are so far up there that's why I'm not expecting, unless we just squeeze, that we're going to head up to take these. But if we were to head up tomorrow, we could even head up Friday and take these and balance some of these price ranges and maybe even trade up into this order block up in 260, right? So that'd be like a squeeze scenario. We do know that max pain is up above. We also know that based on gamma readings, it's a little at odds as far as where market makers want to drive price in order to get the maximum pain as well. And so they want orders short below a certain point and orders long above a certain point. And so they're really like, where those points are contradict each other. So not much of help on the gamma readings as far as that goes, but we do know that based on max pain, based on some other things, that we could see this potentially squeeze, take out a bunch of the people who are short and get us up to some of these other price targets, right? We've been trading below them for quite some time, all the way into last week. And so eventually, and I think once the objective is completed, which I believe it's down into this order block, that we are going to see us push up and try to take out some of these unbalanced price ranges up above. So lastly, we're going to drop into the 1 minute chart, which is what I trade, do live market call outs, trading the 1 minute chart, charting live, posting updates constantly. For those of you who are following, I really appreciate all the support. We do have, a little bit of a kind of here head and shoulder, inverted head and shoulders look that could drive us higher. It's not perfect. I don't really love the structural look of it, especially because we're kind of like coming here, to this. I'll draw it out for you. It doesn't really look right, but it is a little bit head and shoulders ish. But considering what it typically looks like, I wouldn't put a ton of value in it, but it'd take us probably up to this unbalanced price range, maybe something like that. The way you're supposed to measure these out, I'll show you a little trick, is you look at the head, you take the head to the neckline, okay, and then you look for the breakout. If we get up to the breakout of the neckline, okay, your target would be all the way up here at 250. Okay, so that's only if that plays out, but we could see it run there. If we ran there, we'd probably be balancing this price range here. Okay, potentially getting up to the point of control from last Friday's volume. So things to look out for. I don't really love the look of the head and shoulders, but occasionally they do look sloppy and they still play out. Okay, better look, more zoomed in look of this falling wedge. Right, price could take us down into this order block tomorrow. Okay, here's time tomorrow. Right, all the way up to 330. Right, even if we just kind of chopped around and dropped around and popped back up in this wedge, we could still find us tomorrow market close in this order block. Okay, it would also be right below our liquidity pool, which would really be a draw on liquidity, right? And then I told you I wasn't going to delete them because I wanted to show you where they came from, but we have sell side liquidity here in this low. We have sell side liquidity here, right? We have sell side liquidity here that was nearly taken. Okay, and it traded down to and popped back up, and I think we just ran out of time to take that liquidity. But if this truly wants to move higher, I do think we're going to see this pop down, steal the liquidity, right? Possibly pop down here and then run up. So we'll have to see if that's what happens, where the market takes us. I'm going to go ahead and delete those off the chart just because I know where they are and I can see them. But if you want to mark sell side liquidity or buy side liquidity, it's going to always be in. It's always going to be inside top, like peaks and troughs. So sell side, right? Buy side, little buy side, right? Buy side up here. So that's how you mark those as far as where liquidity goes, because oftentimes you see a run on liquidity to a certain point and then price will rip in another direction. So lastly, before I end here, I want to show you where we're at as far as potential retracement. If we do just want to trade back down and head higher right out of the gate, we'd be looking for 238.50 for the 50% fib level. 61.8% is at 237.58. Okay, and the 70.5 or optimal trade entry is at 236.91. Okay, so could we at least expect price to trade back down into these ranges and then run up and see if it wants to run higher? That's certainly an expectation that we could see price retrace to one of these three levels. We've talked about how Tesla likes the 50% level, but optimal trade entry is here. If you take that trade, entering here looking for a long, you're setting your stop loss down here at 234.63, right? But again, we have this looming giant 4-hour order block that we haven't traded into yet. So to me, this, even though that's an optimal trade entry, is a risky entry until I had some kind of confirmation of a break of this falling wedge. So again, thank you for the support. Check out the description below. Got a lot of links in there. I hope you guys read it. I hope you guys check it out. Don't forget to comment. I love to respond to you guys' comments. I love to bring you new content, and look for the new educational video to drop. We got a playlist going. I taught about trend lines and how to use your line tool in TradingView on the first video. The second video, we talked about the fib retracement tool, the fib extension tool, and I gave you my custom settings for optimal trade entry using fib. That also includes an extension tool that you can use to trade lots, and also has pre-built scaling levels for 4 different exits. And we'll be looking to use the pattern. We'll be looking to teach the patterns on the next video. So if you're a new trader, you're looking for education, you're looking at how to use your trading tools so you can trade like a pro, go ahead and watch those videos. They're very educational, and I'll continue to bring them to you as long as you guys continue to like the content. So again, look forward to talking to you guys tomorrow and seeing some of you guys in the Discord, and we'll see you then.